हे भगवान, क्या हो क्या रहा है? I don't understand. That's okay. Okay. So welcome to this CA Simplified Revision Series, Residential Status and Scope of Total Income. So residential status of an individual, how will you identify that? So for that, we need to check certain conditions, okay? So first what we will do is, we will check whether an individual has stayed in India. One sec. Okay. So see, what we need to do is, to know whether an SSC is a resident or not, what we will do is, very first condition that we are going to check is, has he stayed for more than or equal to 182 days in the relevant previous year? If yes, then that person would be resident. If no, then we need to again check that is he an Indian citizen who left India during the relevant previous year for employment, or a crew member of an Indian ship. In case for employment and as crew member of Indian ship, we need to check further conditions. Okay, so if he is yes, then that would be non-resident, but if that condition is no, then in that case we need to check that if an Indian citizen or a person of Indian origin visiting India during the relevant previous year, if his total income other than income from foreign sources, that is his Indian income, should be more than 15 lakh rupees, in that case, if his stay in India during the relevant previous year is more than or equal to 120 days, and one more condition we will check along with this 120 days is that his stay in the 4 immediately preceding previous years should be more than or equal to 365 days. If all these conditions are being met, then that person will be termed as RNOR. Now, another thing that we need to check is, if that person is not an Indian citizen or a person of Indian origin and visiting during the relevant previous year, then we need to check if he has stayed in India for more than or equal to 365 days during the 4 immediately preceding previous years. If no, then he is a non-resident, and if yes, then he is a resident. Now, again in resident you have RNOR and you have ROR. RNOR is your resident but not ordinary resident, and ROR is your resident and ordinary resident. So to check whether a person is ROR, resident and ordinary resident, what we need to do is, we need to check if he is a non-resident in any 9 immediately preceding previous years out of the 10 immediately preceding previous years. So the 10 immediately preceding previous years, we need to check that he is a non-resident in 9 out of those 10 years. In that case, he will be resident but not ordinary resident. And in case he has stayed in India for less than or equal to 729 days during the 7 immediately preceding previous years, then in that case he becomes a resident but ordinary resident. Then we also have this concept of deemed resident that we have already done here. So see, for any Indian citizen or a person of Indian origin visiting India during the relevant previous year, we will be checking, or a member of crew membership. Okay, so for that we will be checking two things: if the Indian income is more than 15 lakhs, and the condition of that 182 days that we will be replacing by 60 days. This 182 days we will be replacing by 120 days. Okay, and along with that you need to be a resident in you need to be visiting staying in India for 365 days out of the 4 immediately preceding previous years. Then you have determination of resident status of HUF, firm, AOP, BOI, a local authority, artificial judicial person, or company. So in case of company, if we see, if it is an Indian company, then it will be considered as residential, and if it is not an Indian company, then it will be non-residential. Again, we need to check one more condition. Is the place of effective management of India? So is the company effectively managed from India? If yes, then that will be an Indian resident company. If no, then that is a non-resident company. Then in case of HUF firm, AOP, BOI, local authority and artificial judicial person, you need to see from where it is being controlled and managed. If it is wholly or partly in India, then it will be resident. But if it is not wholly or partly in India, then in that case it will be non-resident. Now, for resident HUF, you need to check the conditions of the Karta. If the Karta is non-resident in any 9 preceding previous years out of the 10 preceding previous years, then in that case, you need to check whether the Karta is staying in India for less than or equal to 729 days during the 7 previous preceding years. If no, then HUF will be resident and ordinary resident, and if yes, then HUF will be RNOR. Okay, so for resident HUF, again, resident HUF can be RNOR or ROR as per the residential status of the Karta of that HUF. And for this place of effective management in India, we have certain rules. So that is a place where your key management and commercial decisions necessary for conduct of a business as an entity as a whole are in substance made. See here, the substance is very much necessary. Okay, all your key management and commercial decisions necessary for the conduct of business. Okay, and not your operational decisions. If you are taking any operational decisions, okay, then that will not be your POEM. POEM needs the key management and commercial decisions necessary for conduct of business. Those decisions should be taken. If all these decisions are taken effectively from India, then your company will be resident in India, otherwise not. Next we have a scope of total income. So scope of total income, whether the following incomes are to be included in total income. So always remember, for resident and ordinary resident, all incomes will be included in your total income. I'm so sorry. Okay. So see, for your resident and ordinary resident, all the incomes will be included in your income from uh, income from all the sources will be included while calculating your total income. Okay, but in case of resident and non-ordinary resident, all the income received or deemed to be received in India during the relevant previous year, okay, so received or deemed to be received will be included for all three. Now, income accruing or arising or deeming to accrue or arise in India during the relevant previous year. So, income accruing or arising and deeming to accrue or arise. See, the first case was that of receipt. Now, here you have accrual and deemed accrual. So, again, that is included in the total income for all the three residential status. And the last one, we have income accruing or arising outside India. So, in case the income is accruing outside of India, then only in case of ROR that income will be included, even if such income is not received or brought into India during the previous year. So even if the income stays in foreign only, in that case also, if the assessee is a resident but ordinary resident, then in that case that income will also be included in the total income. Now, in case of resident and not ordinary resident, if the income is derived from a business or controlled or in profession set up in India, okay, in that case only that income will be included in the total income of RNOR, otherwise it will not be included, and for NR it will not be included. Then we have income deemed to accrue or arise in India. This is from your section number 9. So what your section 9 says that income accruing or arising outside India directly or indirectly through or from any business connection in India, any property or asset or source of income in India, or transfer of capital situated in India. So if you have any business connection in India, or if you have any asset or property or source located in India, or if you are transferring any capital asset which is situated in India, in that case that income will be considered as accruing or arising outside India directly or indirectly from any of the Indian assets, or from any Indian business connection, or from any property or asset situated in India. So in that case, that income, even though arising outside India, will be deemed to accrue or arise in India. Then next we have salary earned for services rendered in India. So if you are rendering any services in India, even though if you are staying outside, in that case also that income will have been deemed to accrue or arise in India. And salary payable by the government of Indian citizen for services rendered outside India. So if you are an Indian citizen and you are being paid the salary by government of Indian citizen for services which you are rendering outside India. Okay, so you are giving the services outside India, but salary is payable by the Indian government for services which you are giving outside India. Then in that case also that income will be deemed to accrue or arise in India. And if any dividend paid by an Indian company outside India, so irrespective of whether the company is in India or outside India, if that company is an Indian company, then in that case it will be deemed income, deemed to be accrue or income arise in India. Then next we have income deemed to accrue or arise in India. We have some more clauses also. So, if interest is payable by a person resident in India, or a government or a non-resident, in that case that is deemed to be accruing or arising in India. And we have two exceptions here. If the money borrowed and used for technical services or royalty are utilized for the purpose of business or profession carried outside India. So if you have any royalty income, or if you have any of these fees for technical services, in that case if they are utilized for the purpose of any profession or business which is carried outside, then that will not be considered as deemed to accrue or arise in India. Now, if the money borrowed and used for technical service or royalty services are utilized for making income from any source outside India, then in that case also that will not be deemed as income accruing or arising outside of India. Then, in case of a non-resident, if the money is borrowed and used for purpose of business or profession carried on in India. So, if there is a non-resident person, but if that income is used for carrying on any business or profession carried on in India, in that case it will be deemed to have accrued or arised in India. Then, if technical services or royalty services are utilized for the purpose of business or profession carried on in India, or making income from any source in India. So basically, if any of these services, technical services or your royalty income, they are used to generate any income from India, or to generate any source of income, Indian source of income, then these incomes will be deemed to have accrued or arisen in India. Then we have one more case, which is income arising outside India being any sum of money paid without consideration by a person resident in India to a non-corporate, non-resident or foreign company, or to a RNOR where aggregate of such sum is 50,000. So if any income is arising outside India, okay, which is in aggregate more than 50,000, and if it is paid without any consideration by a person resident in India to any non-corporate, non-resident or foreign company or RNOR, then that sum will also said to have been deemed to accrue or arise in India. Okay. Now we come to the next chapter, which is salaries. So what are the income that comes under the head of salaries? Okay. So first here we have section 15, which is your chargeability section. It says that salary is considered as due whether it is paid or allowed though not due, and arrears of salary. So all these things are included in your salary. If your salary is due, if your salary is paid or allowed, even if not due. So first thing, salary due. Second thing, salary is paid or allowed even if not due. And third case is arrears of salary. If any of these things are paid or if they are due, then in that case section 15 will be invoked and your income will be charged under the head salaries. Now meaning of salary we are given under section 17. So 17.1 defines your salary, 17.2 defines your perquisites, and 17.3 defines your profits in lieu of salary. Then we have section 16, which is for deduction. So it gives you standard deduction. Now standard deduction is 75,000 in case of your new regime and 50,000 in case of your old regime. Then your deduction section also has something called entertainment allowance. Now these allowance is given as deduction to your government employees in old regime. Then we have something called professional tax, which is also allowed as deduction. Now remember, professional tax, if it is paid by the employee, then you can claim deduction on the same. If your employer is paying professional tax, then that will be taken as separately as part of your salary and added to your salary. Then you have basis of charge, which is under section number 15. So salary is chargeable to tax, see, either on due basis or on receipt basis, whichever is earlier. So whether your salary is due or whether your salary is received, whichever event happens earlier, based on that you will be charging the tax to your salary. Then for any salary which is paid in advance, it is assessed in the year of payment. So usually the salary tax is assessed in the next year, not in the year of payment itself. But in case if there is any salary which is paid in advance, then in that case it will be assessed in the same year in which the payment is made. It cannot be subsequently brought to tax in the year in which it becomes due. Okay. So once you have charged the salary when it is paid, then again you cannot charge tax on the same when it becomes due. And if the salary paid in arrears has already been assessed on due basis, the same cannot be taxed again when it is paid. So if you have any salary in arrears but you have already charged tax on the same when it was due, then the same you cannot tax again when you are paying it. Okay. Then we have exemption under section number 10. I'm so sorry. Okay. Now we have certain exemptions under section 10. So your section 10(7) says that any allowance or perquisite paid or allowed outside India by the government to a citizen of India for rendering services outside India. So if the government of India is paying any allowance or perquisites for rendering any services outside India, then these is available as deduction under your section 7 to individual who is a citizen of India. The next we have is just 1 minute. So sorry. Okay.